everybody, welcome back and thank you for tuning in. Today's video is a highly requested topic, and that is of course liquidity concepts. As you can see, I have in front of you a portion of the Currency Pros ebook. This is the only time I'm ever going to do this, but I'm going to share with you 2 pages out of the Currency Pros ebook on liquidity. So what we're going to do here is I'm going to quickly read through both of these pages. We're going to discuss it, and then we're going to head over to TradingView and examine real chart examples of liquidity concepts. So I'm going to try and simplify this video as much as possible so that it can resonate with a lot of people and prevent a lot of unnecessary losses in your trading. And hopefully this really resonates with you. Let's dive right into it. In any financial market, for every buyer, there is a seller, and for every winner, there is a loser. Every time you lose a trade, you're adding liquidity to the market. You've most likely heard the terms stop hunt or fake out, which refer to price violating a protective stop loss and then moving in the trader's intended direction afterwards. This occurs because institutional money requires liquidity in the market to place large orders. Common areas of liquidity to be purged are trend lines and the highs or lows of market structure. See the image below for the example of sell-side liquidity being purged from a major low. The liquidity purge can only be confirmed after a clear break of structure has occurred in the opposite direction. We're going to go over that in the real chart examples shortly. Now, training your eyes to spot where price is most likely to purge liquidity is a necessary part of this trading strategy, especially when trading trend reversal opportunities. We're going to go over that shortly as well. In my personal opinion and experience, reversals are much more significant in terms of spotting liquidity ahead of time in comparison to taking continuation trades. The best way to avoid being liquidated is to identify where liquidity has already been purged prior to entering your trade. This confirms your current directional bias and will help you to avoid unnecessary losses. The most common phrase about liquidity is see the liquidity or be the liquidity. That means if you can't spot it, you're likely going to be part of it, which means you're going to lose and you're going to add your money into the market, which you don't want to do. See the example below to understand how identifying liquidity can help us trade on the correct side of the market. Price showed its true intention after purging buy-side liquidity, then impulsively breaking structure to the downside. So this was just a brief preview of what's involved in the Currency Pros ebook. We're now going to go over real chart examples of these concepts that we just discussed. Now, if you want the full version of this ebook, I would highly recommend it. Click the link in the description of this video and you'll be directed right to it. So we're now taking a look at Euro GBP on the 4-hour time frame on TradingView. Now, this is a perfect example of spotting liquidity prior to a reversal, or to confirm a reversal, should I say. So as you can see to the left here, clear bearish price action, right? We were clearly trading to the downside in a bearish trend. And then all of a sudden, price started ranging sideways. So how do we know when to move forward or how to move forward? Well, it's pretty straightforward. We wait for price to break out of this sideways range, right? Now, if it broke heavily to the downside, we would most likely be looking for continuation sells, but in this case, we broke to the upside. And this is the first step in identifying liquidity, right? You can't identify liquidity without understanding breaks of structure because they go together. So as you can see here, I've annotated a liquidity grab, which I like to put a $sign just to symbolize liquidity, money in the market, right? And then you can see that I also have another arrow tool up here saying BOS for break of structure. Pretty straightforward, right? So within this sideways range, price was just consolidating, and then we pushed pretty heavily to the downside. You can see these 2 bearish candles right here, pushing to the downside, but then these wicks were created and price pushed right back up with a lot of momentum. So this is the liquidity grab. Let me just use the replay mode real quick. At this point in time, you would not know that this is a liquidity grab. This is very important, guys. I need you to take your time and really listen to what I'm saying. At this point in price, you would not know that this is a liquidity grab. You'd most likely be anticipating continued bearish momentum and then looking for continuation selling opportunities, right? That's where most people's minds would go. And that's totally fine. Because the thing is, with the liquidity grab, you need to see clear direction in the market in order to identify where liquidity was purged, right? So let me play price forward now. So you can clearly see that instead of continuing bearish momentum to the downside, we wicked out right here and then pushed heavily to the upside, creating a very clear break of structure. You can see that this is not a clear break of structure because price just pierced below the previous low and then pushed heavily to the upside. This, however, is a very clear break of structure because we see multiple candle bodies closing above this previous high right here. So given the fact that this is a clear break of structure to the upside, we can identify that this was the liquidity grab. And all this means is that within this area here, there was clearly a lot of stop orders. If price purges those stop orders, violates all of those stop orders, that's basically adding fuel to the market for the move that it really wants to make, which in this case was clearly to the upside. An analogy I like to use is if you're on a road trip, you need to stop at the gas station first, fill up your tank before you make the trip, right? That's kind of how I look at liquidity. The trip here was to the upside, but price had to stop and fuel up before making that trip. So this false move to the downside to purge liquidity from all of these major lows down here, that was adding fuel for the trip. Now, after that has occurred, we can play price forward and identify a trading opportunity, right? Using the strategy that I've taught on this channel already. We go from swing low to swing high. There's an imbalance here. There's an order block here. Very clear market structure, clear opportunity. So what we can do is set an order at the 71% as usual. I moved price forward a little too quickly here, but you get the point. This is obviously replay mode. It's not a live trade. Take profit at the swing high, stop loss at the swing low, and let's play price forward. And there you have it. So it's pretty straightforward. This obviously isn't going to work every time, guys, but the concept of liquidity, the whole point of identifying liquidity is to add confluence to your bias. It doesn't mean you're going to be correct every single time you trade. It's simply adding a little bit of safety to your bias, right? I mentioned this previously. It's especially important when trading reversal opportunities, because if you're going against all of this bearish momentum, this previous bearish trend, you need that added confirmation that the sentiment in the market is shifting, right? So the fact that we had a liquidity grab here, that's telling us the move to the downside was false, so that we're likely not going to continue to the downside. And then we saw a clear break of structure to the upside. So that tells us the sentiment in the market is shifting. Our bias needs to shift along with it. So instead of looking for continuation selling opportunities, like we would have been in the previous bearish trend, we now should be looking for buying opportunities to take advantage of the current momentum in the market. All right, now we're going to take a look at a bit of a different example. This is on Australian dollar, Canadian dollar on the 4-hour time frame. This is actually a trade that I'm currently holding, and as you can see, it is absolutely hideous. It's one of the ugliest trades I've ever been in. I'm still remaining patient on it because I don't care if it's a win or a loss. I follow my plan regardless. I've been holding this longer than I usually do, but I've completely detached from the outcome, so I could care less. But I want to talk about this example in particular because it's not as textbook as the last example that we just went over. The short trade that I'm in right now is a continuation trade to the downside. It's not a reversal. The reversal already happened, and that's the liquidity grab up here that we're going to talk about. So if we look to the left, price was bullish for quite some time. I wouldn't necessarily call this a trend, but I guess you could say it's a short-term trend. We were clearly moving to the upside, and then we began ranging, moving sideways, right? So obviously we can't trade until we break out of that range. Up at the top here, I have the dollar sign and an arrow annotating that this is where the liquidity grab occurred. So in my eyes, this high right here was the most significant high within recent price action. And if you follow the arrow tool all the way to the right, you can see that this candle here and the following candle pierced above that previous high slightly, which means it's not a clear break of structure. Okay, so that's the first sign that it's potentially a liquidity grab. But as we previously talked about, in order to confirm that it's a liquidity grab, we need to see a shift in structure, a shift in the market sentiment in the opposite direction. So if price was trading bullish, we need to see a shift to the downside after this potential liquidity grab, right? We don't know if it's a liquidity grab yet until price shifts downward. So let me quickly use the replay tool and I'll bring price right back to here. Now I want to do that because this would have been, in my opinion, the first sign that the market sentiment was shifting from the upside to the downside. And this would basically confirm the liquidity grab. Now, technically speaking, this structure would need to be violated, this low right here, because this was the low right before this high was printed. So anything in between doesn't matter as much. These are the two swing points that we need to pay attention to, here and here. Technically speaking, that's what we need to pay attention to, right? But given the fact that these two candles here were filled with such momentum, it would certainly pique my interest and tell me that this was potentially a liquidity grab for a bearish reversal here. Let me play price forward a bit. This would have been the first trading opportunity, but it would be very, very risky. So let me drag out this arrow tool a bit more, and you can see that price pierced past that low. But again, this is not a clear break of structure. This could also be looked at as a liquidity grab. So trading this range here, dragging the fib tool from here to here and going short, I guess it would technically be valid, but it would be extremely risky. So this is not something that I would get involved in. Let me play price forward a bit more. As you can see, it obviously would have worked out. We did push to the downside, but again, this is not a trade that I would recommend taking, and it's not one that I personally took. This would be extremely risky. However, if we now look at current price action, we can clearly see that this bearish movement is pretty much confirmed now, right? This is a clear break of structure. Let's delete this arrow tool now. So we can start to see now that the market has been reversing. We had a liquidity grab up here, and although the shift in structure was a bit subjective at first, after this retracement back to the upside, we have another push to the downside, and now it's very clear. And I can confidently say that my short bias here is now confirmed. There was another opportunity here, swing high to swing low, extend that fib tool out. That's a perfect continuation trade right there. I know my structure indicator didn't identify that as a high, but if I adjusted my settings a little bit, it would. I have my indicator set to show me the most extreme swing points. If I wanted to focus on more minute swing points, it would certainly show that. But that is a valid trading opportunity right there, a short continuation trade. However, I did not get involved in that either. So let me play price forward a bit more, and we'll start to discuss how and when I got involved. This was my short trade right here. This was the idea. I'm going to annotate another break of structure right here. That swing low was clearly violated to the downside. And again, this is just simple continuation structure. I'm looking for bearish continuation to the downside to take out this low right here. The main point of showing you this example is to say that a liquidity grab, it's not really necessary to identify before each and every single trading opportunity. As you can see, there was 1, 2, and now 3 entry opportunities within this bearish price action here. Neither of them had a liquidity grab as a confirmation prior to the entry points, except maybe the first one here, because this was the initial liquidity grab, right? But that was very subjective and extremely risky. All the continuation trades following that did not need that liquidity grab as confirmation, because the liquidity grab is simply to tell us that we're hopefully trading on the right side of the market. It's just an added confluence to give us more confidence in our trading decisions. So the fact that the liquidity grab was identified right up here, that tells us it's safe to enter bearish continuation trades. So we don't have to see a liquidity grab such as this before each and every entry opportunity. That's unnecessary. You could trade that way, but I can almost guarantee you're not going to be trading much, because a clear liquidity grab doesn't occur before each and every single trading opportunity. Unless, of course, you go down to smaller time frames, but then we're entering a different kind of strategy. If we're talking about my very specific 4-hour swing strategy, you don't need to see a liquidity grab before each and every continuation opportunity. It would, of course, be ideal. And when it does present itself, that's great. It adds even more confidence to the trading idea, but it's not 100% necessary. However, just to solidify this point, when you're trading a potential reversal, it is absolutely 100% necessary to identify where liquidity has been purged, okay? Because that adds validity to our bias in the market. This short bias would be extremely risky if I hadn't seen this liquidity grab first. Now let me remove replay mode, and you can see where price is currently at. Again, this is not ideal. I have no expectations for this trade anymore. So we'll see what happens with this trade. I might get stopped out. It might win. I don't know. We'll see what happens next week. I'm going to keep this video short and sweet because I think I discussed the main topic of liquidity, and that is major highs and major lows in price and being able to differentiate a liquidity sweep from a break of structure. If you want a more in-depth version of liquidity, you can certainly join the Currency Pros community, where we discuss things like trendline liquidity, as well as psychological aspects to identifying liquidity. Within my community as well, we do weekly live sessions where I answer all questions related to this. And I also provide a weekly analysis of my exact watch list, and liquidity concepts are discussed heavily in pretty much every piece of content that I release. So the point of this video was to simplify liquidity as much as possible, because it's very important to identify it before a trading opportunity. And I think that it's overcomplicated so much in educational channels on YouTube and other social platforms. And I just really wanted to break it down in the most simple form. So I really hope you gained a lot from this video. I hope it was insightful, and I hope that it actually prevents losses in your own trading. If you enjoyed this video, please like it, comment down below. If you have any questions, I'd be happy to answer them as well. Please subscribe, because I'm going to post a lot more videos like this. Let's keep the channel going and hopefully hit that 100K mark by the end of the year. So thank you all for watching, and I'll talk to you all soon.